Hi, we start our first lesson with the definition of accounting. There are several ways to define the accounting. Let's start with the formal definition. We can say that accounting is the system a business entity uses to measure its financial performance by recording, classifying, and summarizing all the transactions, like sales, purchases, assets, and liabilities, in a significant manner, which are made on standard formats. It helps to evaluate a company's past performance, present condition, and future prospects. Recording the transactions in various books is called bookkeeping, but financial reports can only be dragged once these transactions are classified and summarized. Interpreting, analyzing, and evaluating the financial activities of a business held for decision making in any organization. There could be a simplified definition. In a simplified way, we can say that accounting can also be defined as a mature form of bookkeeping, which has more features, including bookkeeping, its recording, classifying, and summarizing of historical data. We can also say that there is a recording methodology. Accounting may also be called as language of business. Accounting is a standard system meant for measuring business activities, processing of information into reports, and making the findings available to decision makers. The recording methodology is that an accountant never records a conversation or an idea. Every transaction must have some documents to justify its occurrence. For example, to record a sales, there must be adequate evidence in the shape of sales order or sales invoice. Same way, purchase will have evidence such as agreed quotations along with their purchase orders. Likewise, all expenses will have documents as evidence. Now, what is the importance of accountant? An accountant is a person who does the basic job of maintaining accounts, as he is the man who is engaged in bookkeeping, since the managers would always want to know the financial performance of the business. An accountant prepares profit and loss account, which reports the profit and loss or performance of the business during the accounting period. Balance sheet, which is the statement of assets and liabilities of the business at a point of time, which gives financial position of the company at a certain period. Since both statements are called financial statements, the person who prepares them is called financial accountant. Thank you.